Welcome back to another explainer right here on the GAAP Advisors Ind AS Clinic YouTube channel. I'm super excited to dive into this one with you. Today, we're going to break down some complex accounting realities into clear, easy-to-understand concepts. We've got a really fascinating case study lined up that perfectly highlights why precision in financial reporting is an absolute must.
Okay, let's take a quick look at our agenda. First, welcome to the clinic. 2, the financial statement observation. 3, diagnosing Ind AS 19 errors. 4, Ind AS 1, obscuring information. 5, why accurate reporting matters. And finally, 6, your Ind AS resource hub. Let's jump right in.
Welcome to the clinic. Just to make sure we're all on the exact same page, let's set our operating parameters before we look at today's financial statements. We're looking at a standard Indian corporate context here. So, the functional and presentation currency, it's the Indian rupee, meaning any other currency is naturally classified as foreign. And our reporting period is that classic window from the 1st of April to the 31st of March. So, where did we actually find today's observation? Well, this comes straight from the published Ind AS financial statements of a listed company. We downloaded and independently reviewed this on a suo motu basis. Basically, we took the initiative to dig in and pull out these critical insights so we could bring them directly to you.
Moving on to Section 2, the financial statement observation. Let's look at the actual symptoms presenting in the financial statements.
Take a really close look at Note 11 here, specifically under Others down near the bottom. See the units of the Smallest Beautiful Fund? Now, look at the column it's sitting in. It's being measured at fair value through other comprehensive income, or FVTOCI, with an amount of 6.18. I want you to keep this specific classification in your head, because this is the absolute smoking gun of today's case.
Section 3. Diagnosing Ind AS 109 errors.
All right, let's open up the standard. Paragraph 4.1.4 of Ind AS 109 tells us that a financial asset generally has to be measured at fair value through profit or loss, or FVTPL. But there is an exception. You can make an irrevocable election at initial recognition to use FVTCI. However, and this is a massive however to remember, that election is strictly limited to particular investments in equity instruments.
And that brings us to a huge roadblock. You see, a unit of a mutual fund, like our Smallest Beautiful Fund, is a puttable instrument. Because the holder can essentially put it back to the fund for cash at any time, it is inherently a financial liability from their perspective. It's not an equity instrument. Now sure, Ind AS 32 does have some exceptions that allow the issuer of the fund to classify it as equity, but that doesn't change anything for the investor holding it. For the holder, it is a financial liability, period. FVTOCI is legally impossible here.
So here's the dramatic clash between the rules and reality. The company actively chose FVTOCI, but because these mutual fund units are puttable instruments, meaning liabilities for the holder, FVTOCI is completely off the table. The standard literally mandates FVPL for these specific units. It's a pretty glaring non-compliance.
Let's move to Section 4, Ind AS 1, obscuring information.
This initial error actually creates a domino effect. Paragraph 112C of Ind AS 1 says the notes have to provide information relevant to understanding the financial statements. But here, the company didn't give any reasons in the notes for this weird FVTOCI designation. If you're a user reading these statements, you're left totally in the dark, wondering why on earth a puttable instrument is sitting in an equity-only classification.
And it gets worse. Ind AS 1, paragraph 7, talks about obscuring information. Let's give them the benefit of the doubt and assume they actually did explain this somewhere else in their massive annual report. Well, if they didn't properly cross-reference it, it still counts as obscuring information. Why? Because scattering vital details without clear links is essentially the same as hiding it entirely. Nobody should have to go on a scavenger hunt through hundreds of pages just to figure out a material accounting policy.
Section 5. Why accurate reporting matters.
Catching these things early is an absolute game changer. This is exactly why getting your financial statements reviewed by GAAP advisors before you even sign them is so crucial. If you're an auditor or CFO, just send your statements in a near-published PDF format to info@gapadvisors.com. It'll save you so many compliance headaches. And hey, if you happen to invest in listed company shares, these independent reviews are a total goldmine. A rigorous review of a company's Ind AS compliance can help you safely decide whether to buy, hold, or sell those shares.
Section 6. Your Ind AS Resource Hub.
To help you avoid these exact pitfalls, you absolutely need to check out the GAAP Advisors repository over at gapadvisors.com. It's an amazing database that currently hosts over 4,500 issues and detailed responses on Indian accounting standards and Indian GAAP. The best part? Registration is completely free. You can submit issues and get a detailed response delivered straight to your email inbox. It's an incredibly useful tool, particularly for auditors who need concrete documentation on how they address complex Ind AS applications. Also, fun fact, the exact observation we broke down today was actually featured in the 206th edition of the GAAP Advisors Task Weekly newsletter. It's expertly authored by CA Manish C. Iyer, director at GAAP Advisors. There are over 230 editions published on LinkedIn so far. If you're on LinkedIn, definitely go subscribe to the newsletter for free right now. And if you have specific issues you need help with, you can book a one-on-one consultation with him directly from his page on topmate.io.
If you want an even deeper dive into this observation, make sure you connect to the GAAP Advisors Ind AS Clinic podcast on Spotify, Amazon, or right here on YouTube for more insights just like this.
Just a quick note before we wrap up. Please remember that the views expressed in this explainer are the personal views of the author and aren't binding on the audience. We definitely request that you seek expert help before taking or refraining from any action based on what we've discussed today.
Thank you so much for your time today. If you found this explainer helpful, please hit that like button, drop a comment with your thoughts, and subscribe to the GAAP Advisors Ind AS Clinic channel if you haven't already. And please share this with your contacts, audit teams, colleagues, and especially students pursuing their CA course to help spread the knowledge of Indian accounting standards. Oh, and definitely follow our WhatsApp channel for instant updates on all our new explainers, podcasts, newsletters, and newly issued standards. Keep learning, and I'll leave you with this final thought to chew on. Is your financial reporting revealing the truth or obscuring it? See you next time.